G'day all, Ben here, East West. I'm going to take a look at uranium this week. Obviously, it's a very big week coming up with the election. We just don't know how that's going to shake out. So the overall market may be a fair bit different this time next week. However, we don't know what that entails, so we'll just have to wait and see. But we'll just have a look at what happened this week and where we sit right now. There's been some great moves through the week. Of course, ASPI had a fantastic week, so congratulations to the holders there. My guys, Uranium Charts and the Red Devil, have been all over this one for a while, so if you're not following them on Twitter, you should. Now, I have also redone parts of this video because I realized I was saying Palladium instead of Paladin, because I'm going to look at Paladin very quickly on the ASX as well. So thank you. Someone pointed out in the original comments on the original video. Don't know why I said that. Obviously just had Palladium on the brain. Anyway, enough of my rabbiting. Let's jump into it. So just starting off with NUKZ here, and what really gets my attention more than anything is probably just the way that this volume is now slopping away. Okay, so the interest is running out, and that's being shown here in the RSI. Now, where we're just starting to tail away and the market's just losing momentum. Now, it looks like we can sort of count 5 waves up here, and this is quite a steep run, this little yellow trend channel. So it's starting to look a little bit unsustainable to me. But in that being said, we are also now digesting the move. So will we hold this range? Well, as I said, there's a lot of unknowns into next week, and I think basically, the market's going to be hostage to just what the overall situation develops as. At this point, I would probably favour a correction in this. So, just when I think about corrections, standard sort of thing, I'd just be looking for a move back to this sort of area down here. So, sort of around this sort of high $36 mark, and nothing says that it doesn't stop here, or nothing says, of course, that it doesn't keep going. This is just as I see it, as it sits now. So that, there was a few kind of interesting technical factors here. Certainly this overall trend channel that we had down the bottom here, when we clone that and sit it on top, the market's just pinged the top of the expanded trend channel. So this kind of looks like it's framed up pretty well for now. So a visit back into the lower half of this, sort of how this lines up, a visit back here would not surprise. Just more so, not so much as a commentary on the overall market, but just more so that interest starts to wane and hot money starts to flow out looking for something else, because this has been a great run. So it's not to be unexpected that there will be people who are looking to take profit now. Okay, it's just a question of people establishing further longs or people taking profit, who wins in the immediate path of price. So naturally, we don't know if the market's going to go down or up in the near term. But to me, I would just suspect I would lean more against into a correction coming. So I'd be prepping myself to think, okay, well, this becomes the sort of area that I'm looking for. And you can sort of see back, especially these old peaks here, that they just come in and line up inside that retracement zone. So that, that kind of looks like my point of call, something like that, if we can get it. Okay, like I said, nothing says it doesn't just keep going, but that would be the battle plan at this point. You could possibly come off this low, but I think I would just come off here, okay, because I'm just counting this as 5 waves up here and completing as we start to diverge away. So moving on to SMR, and this one's, it's a similar thing that we're seeing here, right? The volume's just tailed away as the interest has waned in the immediate price path of price. So I think the last time I looked at this, we're around about here, and I was just talking about the need for the correction, which looks like it's beginning. So nothing says that it's going to go down into this range, but this would be the range that I'd be hoping to see. It could stop here, of course, or it could be finished and it could go up. This is still my preferred path of price. I think this is how I'm looking at this, simply because there's a few other shiny things going on in the space at the moment, which we'll look at. But maybe a little bit of the oxygen has been dragged out of this one, as we can see this volume tailing away. There is some hope here, though. We have been riding this shorter term MA cloud pretty well, and so far it is holding. Okay, so there's still reasons to think that until this actually breaks, and what I was looking at is, a possibility until this breaks. Yeah, you've got to stay bullish. Okay, so even if we do break through this shorter term cloud, we still have the confluence of the longer term cloud and the 50, which that they could line up together, and this longer term cloud could just catch price on any sort of pullback and retracement, and that would be the point where I'd be interested in initiating a long trade. So obviously that hasn't happened. We just have to wait and see how next week develops. But that would just be the plan as it sits here. Okay, so waning interest, momentum is starting to just wane a little bit in terms of this fantastic run that it's had. So yes, maybe a little bit of a correction. The test of the lower cloud and the retracement zone is the order of the day and the play going forward for SMR. And so now looking at ASPI, which has also had an incredible week. We had a big news story out on Wednesday, of course. And that was news that ASP had done a deal with TerraPower. So there's, I'm not going to report on the news. You can look that up yourself. But obviously this was a tremendous boost to the share price, went up something like 20% on the day, even further. So good news for ASP holders. Once again, this is one of those stocks that both my guys, Uranium Charts and the Red Devil, have mentioned before. So hopefully you got on board. But of course, stocks like these, you could almost sort of say, well, this is the reason that those other stocks have had interest waning, because money might be flowing out of those and into stocks like this and chasing this momentum. So right now, looking at this, obviously we do have quite a large gap here, which nothing says it has to be filled. But the market just has a tendency to want to fill gaps, to just make sure that there's no price that hasn't been fully explored. But look, so far since this large move, you've got to say that the market's done a pretty good job of holding up here. Okay, so if there was people taking profit, there's been enough buyers to that are happy to load into this stock, at these elevated prices. And when I say elevated, I mean elevated compared to Monday. In weeks and months, this might look cheap. Okay, this might look like a really good deal. And this could be a lot higher. We don't know. We're just looking at the short term. But like I said, it looks pretty good to me that the market's been able to hold this, and we haven't had the immediate spit back down. It may come, but so far so good. That's what I would say. So even just taking a closer look here, and this is just the volume profile, right? So this is Wednesdays, this is Thursdays, and this is Friday. So what's nice is the point of control here on Wednesday, the market held. On Thursday, it just crept up a little bit more. Okay, so we've got the point of control here where the market spent the most time and did the most volume, and then today on Friday we've crept up a little bit further. So the market, to me, it just looks like it's accepting these levels. Okay, it looks less likely to want to come down. Now, any sort of external shock, of course, can change that, and this is obviously the gap that's in the market. So there's always potential that we might come down and test back into these other old points of control through the gap. Okay, that wouldn't be an unexpected thing if that did happen. But like I said, for right now, this is absorbing the rally quite well. Okay, so we'll wait and see what happens into next week. But certainly, if you're long this, there's reasons to be optimistic that these sort of areas down here will hold. I mean, just quickly looking at this, where's here's sort of $7. It just, to me, looks like that. The buyers, there's definitely a lack of people willing to sell under $7. Okay, it just looks like that around this $7 area, the buyers are there ready to step up. Okay, and even just looking at this, okay, so we've got a couple of weeks here, and I would suggest that is just buyers stepping up to the plate here just to buy any sort of dip in this market. So right now we're sitting sort of in this mid or high $7, and it looks like anywhere as we start to, anywhere down here where we drop, the buyers have stepped up, which is, what these wicks are sort of telling me. The market's rejecting these prices. So that looks quite good. This is very short term, right? We're just talking about an hourly here. So that looks pretty good. This area looks pretty solid. Maybe if we start finding more willing sellers through this $7, we can then expect to maybe come down and test back to $6. that would sort of be how I'd look at it. But so far so good. Let's see how this one develops. Okay, so now just looking at Lightbridge, which also has had a roller coaster week, you'd have to say. Okay, so starting off the week here at $8, and then exploding up to 14, and now we've dropped all the way back to sort of $7.30 as we come into the close. So this is an example of things I've talked about. You've got to be careful about markets that rally very strongly like that, because there is the propensity to give it up quickly, which is what has happened here with Lightbridge. So this pullback from the bottom of this rally has been very, very steep. So just looking at the structure here, and I'm just taking off this low because when I look at this, we sort of, we've had this, we had this range that the market wasn't really going anywhere, and I've just taken this bar here as the start of the move, because that's the one that broke the range, and that really started to propel the market up. We came right back to the 61.8, and we came right up there to the second target of the measured move. So look, this first movement here, that is one thing, but what's come back the other way has been a lot more severe, obviously. So you could take it like this, and we're right back on the 61.8 again. So I'm not saying that you could expect another measured move here, because I can't really see a lot in terms of Lightbridge's news flow that would support price, and maybe that's part of the reason. Okay, we also had some of these. Well, I don't know about the earnings, so I'm going to leave them alone, but you've just got to look at the dynamics of what's going on here. Okay, so it looks like there's just a lack of buyers now. Okay, and there's not many sellers, but that they're doing enough. So the sellers are outweighing the buyers, but the volume's not huge. So in its favor, this looks very much to me, just as it sits, of course, it looks very much like the three-wave move. Okay, that's a classic correction pattern, 3 waves down like that, and we've just run right into this 61.8. So I wouldn't be putting a flag in the ground saying that that's the low in Lightbridge. I mean, you can see because of the price movement, this is quite speculative. It feels like it might need something a little bit more concrete, and you can just see this is on an hourly, but you can just see here as the day's worn on, people have given up, the rally. So I'd just be watching this one, just watching closely if you wanted to play in this particular stock. It's had its fantastic move. I mean, it wasn't that long ago that it was trading at $3 and it's got to 14. That's a very, very fast move. All right. So you could make an argument that it's kind of just now finding a little bit of trend support here. But we're just slopping through it onto the close. So I don't know how much I'd lean into this. I'd just be watching for signs now that the market can start to trend back the other way. Okay, we don't have that yet, and obviously that a lot's going to depend on what happened next week. So that's the play with LTBR. This was another one that my guys are on. I think Uranium Charts is certainly on this one. But as the Red Devil said, these things usually they'll give you a retracement, and this is the retracement in LTBR. So watch and act. I think I wouldn't necessarily be charging in long here, but I'd just be keeping an eye. I mean, maybe you just want to have a little dip in there. That's up to you. But maybe keep a little bit of powder dry at least. So if it does fall a little bit further, you're not freaking out, and you can absorb a little bit of pain, a little bit of discomfort if it comes down a bit further. Look, it could come all the way back down to there for all I know, but you just got to have your plan in place. So, I think it's pretty obvious, right? You probably don't want it down here through this $5.80 area. But just here it looks okay. It looks like it's a good place that you would expect the market can hold. So we wait and see if this holds and if we can start to rally again from here. So just moving on to URA. We talked about this a few weeks ago when last I looked at it, that it looked like we had 5 waves up here, just touched through that high, that all-time high, and now we're just correcting. Okay, so this path of price is not a prediction. That was just a possibility. Okay, so I'm not trying to say that that's what the market would do. It's just more of a graphic representation of what could potentially happen here, and so it's proving. Okay, so we never really diverged in URA. Maybe you could say every so slight there, but it is definitely, this stellar run is now being digested. So it does look to me that we should at least come down and test this little bit of structure around the 38.2. Which we've already done here, right? So, but I wouldn't be surprised to just see it a little bit lower and just sort of come down here and touch the 50, sort of as per this lovely little graphic that I've produced here, which of course is nothing but a copy of previous bars. It's nothing that fancy. Like I said, it's just a graphical thing. It's not a prediction. I'm not trying to say, oh, it'll do exactly this in that time. It's just more of a, okay, well, and you can see, I mean, it's kind of looking like the same, and I'm not trying to copy it exact, but I'm just sort of thinking that is the type of thing that I would expect, and so it's proving. So once again, we wait and see what happens through next week. Obviously, it's so massive that anything can happen, and the market's going to be held captive a little bit to whatever happens with the election, because I think whatever happens, it's not going to be smooth sailing. I think that's probably pretty fair to say. So like I said, this 38.2, gives reason. It gives a bit of pause there, but just be aware when we're talking about the moving averages here. If we do get through this 38.2, we're probably going to bust the bottom of the short-term cloud, and you can just see here the longer-term cloud. You can see here the shorter-term cloud. It's just starting to turn a little bit bearish as we break through, but that's probably then these retracements will bring the 50 and the 200-day simple moving averages into play, which you can see right now that the 200-day moving average is sitting right at the 50% zone. So it kind of lines up there that pardon me, that if we came in here and tested like that, and we could have some pretty severe wicks in the market on Wednesday morning. We're not really sure what will happen. So be prepared, but that would be the kind of point of call, and this is just how I'm expecting URA will continue to develop before we sort of find our feet and we can start to rally again. That would be the general expectation for me. Just have a quick look here at Energy Fuels, and Energy Fuels is doing Energy Fuels things, isn't it? But I mean, this is kind of interesting. It's a good case study, because this is just your classic. I mean, I think that's what I drew, but this is just your classic three-wave correction, and it's right back into the retrace. So this is what I look for. That's almost picture perfect as to what you would look for. Now, that doesn't mean that you just charge in and buy, but it means, okay, well, there's a better than likely chance, not a guarantee, but a better than likely chance that due to this, okay, I would think that this correction is more likely finished than not. Okay, so that doesn't mean that it won't go further. It doesn't mean that it won't fall further. But at this point, as we come back down here and test this structure into this retracement zone, this is where you start to think, okay, well, if I start to see this, okay, I'm starting to feel pretty good about where I am in the overall progression, okay, of the trend, which is, of course, what we're looking for, which is that. All right, so yeah, this is just played to the tune of what we would think. Okay, so it's come right down, tested the structure. Maybe we get, who knows, maybe we just come down here and test the double bottom, and make a double bottom there, which if you look back in a month, you'd be like, wow, look at that formation, look how good that was. But we had structure, and you can even tie this further back. We had structure, we broke, we held, so it is pivoting around between this sort of $5.60, $5.30, that sort of bracket just seems to be the pivot point for the market. And right now we're just back testing it. So reasons to stay optimistic. We know we sort of came through this longer term downtrend that we had, but in a word of warning, we did also just fail at our first attempt of these first significant highs. Okay, but this is exactly the kind of launch pad that I would expect for a market that is going to run further. Okay, first three-wave correction, and there we go, and start breaking away. So that would be the general expectation with Energy Fuel. So this one will be an interesting one to watch. Okay, let's just see what goes. But so far, this looks a pretty good case for an impulse with a three-wave correction back into the retracement zone. Ticks a lot of boxes for me, but we will see. Okay, I just wanted to finish off with an ASX one, and I am going to endeavour to do some more work on the ASX stocks. But obviously, Palladium, which is like the Cameco of the ASX world, I suppose you could say. It's the one with probably the most liquidity and the biggest market cap. But it came under a fair bit of fire this week because it's had to shut its mine for a few weeks in Namibia, and that is going to threaten its output targets. So that has certainly put the cat amongst the pigeons. But you know, quite possibly, I think this is opened up an opportunity. One of the things that I did point out on my Twitter feed, on my X feed this week, is that when you look at the most shorted companies on the ASX at the moment, a lot of them, Palladium there, Boss Energy's there. There's a lot of deep yellow. So you know they're probably the big ones, right? And you can see here that there's been a little bit of short increasing going on here. So you know that's something to watch, because obviously those shorts will need to cover at some point. Okay, so you know that could just add a little bit of fuel to the fire if we get a trigger from the northern hemisphere in terms of some sort of movement through the larger uranium space. But you can see here, you know, the shares slipped quite heavily from their highs. Sort of, you know, this was, you know, a couple of weeks ago. We're up here at $13.20, and then we came all the way down to $9.50. But we've just started to find our feet now. Okay, so obviously there was heavy volume on Monday when that announcement came out about as their challenges in Namibia were more widely exposed. Nonetheless, look where we are now. So we just come back here. We came straight through the retracement zone. So, you know, the panic shorts, just get me out, you know, whatever. This is a common thing through the whole of the ASX uranium market. But look, you know, I sort of said a few months ago when we were in the grips of, you know, the largest sell-off in uranium, when there was a big dump in the sector overall, that market's on sale. So you could say the same thing here now, right? So, you know, I would just sort of think that what's nice about this setup is, okay, well, if you're buying in here just around this sort of $10 mark, the point where you're wrong to me looks pretty clear. I mean, if it gets back through here, well, you probably don't want to be involved. So, you know, you would want to probably stop out of the position back through there. Okay, but you know, also just let's just consider this on a broader context. If we come out here to the weekly, okay, the first rally back, the correction, you know, a wave 2 correction is usually pretty deep when compared to you know, wave 1. Even though 50 to 61.8% is the general area, you know, that this is the sort of thing that you would expect to happen. This is the sort of thing you look for when prices, you know, when you're looking for price to repeat. Now, there is a little bit of a danger here. And the biggest danger technically is that the market came back 50% of the trip down. Okay, so we're talking about this move. So when we talk about that move, the market's bounced 50% and started to give up again. So you certainly wouldn't want to see this low give way, and that's why I'm sort of saying that the setup for the trade's pretty good, because you know where your ultimate risk point is. Because if we start losing this, well, you're starting to think down here, okay, not great. So you've got to define risk. That's how I would look at this trade. Okay, so we will see. Okay, the danger is that this is 3, even though, you know, could you say that's 5 waves down? You could possibly. It's not super clear, or you could say that this is 3 waves down. Okay, so we don't really know which way it's going to go. But I just look at this and think, okay, well, there's reasons to be optimistic here. Okay, this looks like a market that's on sale. If you believe in the overall uranium story, okay, you might have to suffer. You might have to take. You could buy it here, and you might have to take a little bit of pain, and you might be strong enough in your belief that stopping out below here is not what you want to do. Okay, maybe you want to ride it down further. You're happy to wear it down to here. So if you want a deeper stop, a deeper point where you're wrong, we'll just size your position appropriately. Okay, if you want a longer stop, a deeper stop, buy less. I mean, you don't get as much on the upside, but you'll stay in the trade. Okay, so on special. Okay, so we're just coming in here. Let's see how this pans out. But my general thinking here is it's probably an overreaction. So, you know, I think you've just got to wait and see how this digests. Remember, on a weekly here. So, you know, we threatened this weekly cloud. We couldn't bust it. But just looking at this Ichimoku sense, as the weeks now roll on, you know, if we get to this point, so maybe we're talking early next year, the cloud thins out. You know, that would represent, okay, when the cloud thins out like that, that would represent the power of this downtrend in terms of time is not going to influence price as much, okay? Because it's all about a time and price balance, all right? So that to me just looks like more like the probable path for Palladium. But look, absolutely, it could just ricochet up like that. There's no doubt about it. We've seen what happens in this space, but I would just expect that there's going to be a little bit more time, a bit more of a grind going on here. Okay, so that's why I sort of say just be prepared to wear a bit of pain. Okay, be prepared for it to slip a bit lower because it is still in a bearish stance. Okay, but if we can break this top, then if we can break this top before we break this, without breaking this bottom, well, you've got a weekly trend change. Okay, and that's what you're looking for. It just might take a bit of time. Just finishing off here looking at the spot price because it's kind of interesting just looking at the futures here. I mean, this is my own seasonal chart, which just sort of shows that the market has a propensity to rally in November. It's spot price, and here we are. So is this about to turn back up? I think that's the question. So I don't know. I mean, this is just a representation of what has happened in the past, and in the past it suggests that this market is primed to rally a little bit. So is that going to help the stocks? Well, I'd hoped it would help the physical uranium trust, because that's certainly not dancing to the same tune as the rest of the market. Now, TradingView have actually started doing seasonal charts themselves, which kind of mucks up all the effort that I went to build these bloody things. But a lot of it is maybe influenced by what happened last year. Okay, so you can see in 2023 through November we had quite a big rally, and we pushed up a little bit here in 2020 as well. But you can see so far in 2024, I mean 2019 we pushed up a little bit in November. 2022 we did not, and certainly 2021 we also did not push up. So it's not a fait accompli. That I think that's what I'm trying to say. I mean, the move, the scope of the move in 2023, I think, it has sort of warped the seasonals a little bit, even though I've developed that with a trim mean, so it should take out a lot of the larger moves. But whether or not that's going to play again, I don't know. But certainly we're just sitting down here on a level, and it just doesn't kind of line up that the price of spot isn't going to respond pretty soon, especially when you sort of look at things like Palladium, even though that's not a massive producer. But we know that there could be some problems with various mines, and that supply could tighten a little bit further. So you would hope that this would play out this way, but we all have to wait and see. So that was just a little note there to finish off on the physical. So that is it for this week. Obviously the landscape could look a fair bit different come this time next week. We'll just have to wait and see how this election plays out, how the market shakes out, and then we can go from there. So thank you very much for watching, and see you next time. Bye for now.